Hello everyone and welcome back to my channel. In one of my recent videos, I shared a full trading plan based on retracements on the higher time frames. I provided you with the exact method to establish the bias, confirm it, and identify entries on the lower time frames. Today I'm sharing a trade breakdown that I executed this morning using the same strategy. I believe that the best way to learn a strategy is by studying and collecting examples to train your eyes to spot it live. So I will share my thought process, how I manage the trade and more. So if you are interested in that, then stick around till the end of this video and don't forget to hit that like button and subscribe to the channel so you won't miss any upcoming videos. And let's get started. So as you can see, here's the trade. I shared that on my Twitter account, as you can see here. And here is the execution for full transparency. So entered here and exited here. And now let's start with the breakdown. So as you can see, here's the trading plan that I shared with you in my previous video. I'm going to link that in the description so you can take a look at it, go and study it, guys, maybe after this video. So we have 3 steps, right? The bias, the confirmation, and the execution. And we're going to apply each step on the chart, and I'm going to show you exactly how to do that. So as you can see, this is the Euro EUD chart. So the euro against the sterling dollar. And the first step is external range liquidity to internal range liquidity. Meaning we want to see an expansion lower or higher. In our case, lower. We want to see that expansion take external range liquidity in the form of swing high. And then we want to see return or retracement to internal range liquidity, which is a fair value gap right here. So here is the fair value gap, right? So the bias is in check and we want to go higher, right? And here's the time frames that you can use for bias: the weekly, the daily, and the 4 hour. Start with the weekly. If it's not clear, then move on to the daily. If it's not clear, then you can move on to the 4 hour. So here's the external range liquidity, and here's the fair value gap that we want to target. And we have also confluence of an order block right here, right? So this is another confluence to go higher. We don't need that, but it is great to have it in your chart as a confluence again. So we have done with the first step, and now let's move on to the second step, which is the confirmation or the narrative. We can use the 4 hour, the 1 hour, and the 50 minute to confirm that. So we have this, we want to see a market structure shift. We want to see sweep first or an SFT divergence, and we want to see also a market maker buy model in our case because we want to go higher. And I'm going to show you how that looks like in the chart. So let's drop down now to the 1 hour. You can use again the time frame alignments: weekly, 4 hour, 15 minute, daily, 1 hour, 5 minute, or 4 hour, 15 minute, and then the 3 minute. These alignments are best practices. And let's move on to the 1 hour chart. So what do we have here? You can see that we have this expansion higher. This is a market structure shift. We don't have that close above this, so I didn't take this into consideration. But as you can see here, we have violated this bearish fair value gap. So now it became bullish fair value gap, inverted fair value gap. It will support price to go higher. Right, this is from Friday, right? And we have also this bullish fair value gap. We have a sweep first, right? And here is the market maker sell model here. So we have here original consolidation, second distribution, and the third distribution right here. I'm sorry, this is the first distribution and this is the second distribution. This is the original consolidation. We have here a smart money reversal, right? And then we are preparing to go higher. So this is the price action from Monday. We have a market structure shift, as you can see. So market structure shift, and we have that market maker X model in check. And now we confirmed our bias to go higher. So we want to see a market structure shift and market maker X model. Here's that swing that we took. And now let's go on to the third step, which is the execution step. What we want to see here is, first of all, we have a time window. So from 2 a.m. all the way to 5 a.m., This is the London kill zone, and from 8 a.m. all the way to 12 p.m. and this is the New York kill zone, New York local time. So always check here, make it in New York, right? So the time is in check. The second is we want to see a market structure shift from a PD array on the confirmation time frame, and we want to see sweep first or an SMT divergence. So a market structure shift from a PD array. So this displacement right here, this market structure shift on the 1 hour, it left 2 PD arrays. We have also this order block. When price retraces to the first PD array, you want to go to the lower time frames, and in our case, we're going to use a 5 minute, and you're going to look for a market structure shift from that PD array. So let's drop down to the 5 minute chart, and as you can see here, we have that market structure shift right here, right? This is a market structure shift. We don't have a sweep, right? So you can see that we don't have a sweep, but we want to see a sweep or an S&P divergence. So if you go to here and we can add the GPP EUD chart. Why? Because this is the correlated pair with EUD. So as you can see here, if you go to this side, MyFX book, the top positive correlation, you can see that your selling dollar is correlated with GBP EUD, right? So as you can see here, Euro EUD didn't sweep liquidity from here, so it didn't make a new low. But on GBP EUD, we did have that sweep. So this is an SMT divergence, and our step right here is confirmed. So we have a market structure shift and from the hourly PD array. And also we have that market maker X model from the confirmation time frame. So this is in check. And now you can enter from here, right? When the price retraces to this fair value gap, for example, I entered here. We were still on that time frame, so from 2 a.m. all the way to 5 a.m. On the 15-minute chart, it looks even clearer. So here you go. We have a nice displacement, energetic displacement breaking this. We have an order block, we have a fair value gap, a breaker block. You can enter from anywhere, right? And let's not forget the element of time to our trade. So if you go here and add a vertical line on the midnight, so if you are expecting a bullish day, then you want to see price manipulate below the midnight line first, the midnight open. So we have that here, and here's the logic for that. So suppose this is a daily candle, right? All the daily candles will look like this. You will see an open and then a wick right here, expansion, printing the high of the day, and then closing just below the high of the day. From here, the open is the midnight open right here. The wick right here is the manipulation move to the downside, all the Judah swing. So we see that here, right? Compare the wick right here with this move here, and then the expansion higher. We have that expansion higher right here. And then we expect at the end of the day to close just below the high of the day, right? This Judah swing, as I told you before, will do only two things. It will either sweep liquidity, and we have that here, we swept liquidity, so it can also retrace to a PD array. In our case, it did both, and this is a great confluence. We have sweep on liquidity and then retrace to a PD array, this hourly PD array. So this is a perfect trade, guys. This is the exact trade that you want to look for. Again, please refer to my video. I have provided many examples and I explained these steps by details. Take notes and pay attention. So I believe we have come to the end of this video. If you have any questions, please DM me my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.